Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, December 2nd. It is 7 o'clock straight up as I'm starting the video. Today's might be a little bit on the long side. Got a lot of charts to go over after yesterday's dramatic price action. So I definitely run the player at 1.25 to 1.5x. And you can certainly stop and take a note or slow it down if you see something notable. Okay, let's get into it. Yields taking a nosedive. We were up here at 1.66%, and we have just cratered down here to 1.43. It's really got to hold the line here at 1.4%. I mean, you go below that, and I mean, I don't know what to tell you there, but the COVID variant plus the taper situation, looking like they're going to want to accelerate that, has really put a damper on growth expectations. I think this is mostly COVID stuff, I would imagine, because if you're going to start tightening, that would imply yields going up, but it is what it is. But that's been a dramatic thing. Tough trade. I mean, we've been, chopping back and forth almost on a daily basis. Not really a trend there at all. But we have broken out, and we've got a $5 trading range. So from that standpoint, the door's open for a move up to 156 on TLT. I mean, this is the highest level we've been at, going all the way back, way back in time. You can see here that 151.5 was the level that, had contained price all along the way, but now we've broken out. So I've got a resistance level at 154 that goes way back in the chart, but from a measured move basis, it projects out to 156 on TLT. VIX, wow. We were looking good in the morning session. We had VIX had driven down into the mid 22s, and then in the afternoon session when everything fell apart, I mean, this thing did a moonshot up into the low 30s. You can see that we're at the highest level we've been since way back in March and early in the year. I have my doubts whether it can hold it here. I mean, we could definitely hold it for a day or so, but I don't see this thing going up to 40 or something like that. So what I want to see is VIX come in, break back below 29, and get on a downward trajectory. I mean, that would be a very good sign. I mean, if it holds 30, I mean, you can't really go long too much stuff with VIX over 30. That's really been a demarcation line for us, going way back in time. So, if it holds up here, that's going to signal a lot of turbulence in the market, and I would be very, very cautious there. NIMO and NAMO, let's take a look at it. And these things have been gold to us, and I'm going to assume they'll continue to be gold. We had a minus 70 reading heading into yesterday. Many of us positioned for a bounce, and we got that bounce. We got a nice bounce in the morning session. It was looking great until it didn't. So now, we had gone up, in the morning session. These are end of day readings. So during the bounce, we were oversold at minus 70. We were getting a bounce in the morning like we expected, but then when it reversed, we are all the way down here at minus 87. I mean, just look back in the chart for years, literally years. It doesn't go much lower than that unless you think, we're going into a a March 2020 scenario where, I mean, just the whole thing waterfalls. I mean, it's tough to be short right here. I mean, I think we're gonna be due for at least a reflex bounce. So, I mean, that's where I'm thinking. We go over to the NASDAQ oscillators, and we're down at 83, and I've kind of scratched a line across, and you can see that, in March we got the 93, and then in March of 2020 on COVID, we went to minus 124, which is probably the lowest it's ever been. So I think you got to figure on a bounce. We started getting it yesterday, and then we got that Omicron news, which I thought was a nothing burger, but the market saw it otherwise. That first case that showed up in California, that was kind of the thing that broke the dam on the rally. So, here we are back again, way oversold. I think we're going to get a bounce. Whether that's sustainable or not, I have my doubts. But we're all talking about positioning, and from that standpoint, I'd like to lay on some shorts at higher prices, and I don't think you can. I didn't want to get short yesterday at 4 o'clock, knowing it was way down here. So I closed off some of my shorts heading into the close. So what I want to do this morning is back the charts out a little bit, kind of show you where we're at. I know we usually focus on the the daily, the hourly charts, the short time frames, and that's been appropriate because we've been in a strong uptrend. But now, we are beginning to roll over, and we've got some very critical lines in the sand that we got to look at. So here we are on SPY. I've got a couple of potential trend lines going back here to the COVID lows on the solid brown. You can see it's not a great trend line because we've only got really a couple touches. I'd like to get more than that, but it is what it is. So we're sitting right here at 450, and you can see that marked the prior high. So remember what we always say: when you break out here from 450, which was here, you don't want to go back below, because then that makes that look like a fake breakout, right? And we're sitting right on that line, whether you look at it from the standpoint of a more generous line here with the dashed brown, or off of the COVID low. They both come in at approximately the same place. So I think that 450 is going to be a really important line on the weekly chart, because you drop below 450 and you can see that we've got a large volume over price bar here that comes in right at 430, and that is where the 40-week moving average comes in as well, and that would be a very important level on the chart. If 450 were to break, you certainly don't want to go below the 40-week moving average. Then your conclusion has to be that we're rolling over, basically. Once you lose, 40 week is the same as a 200 day. So once you lose the 200 on the daily or the 40 week on the weekly chart, by definition, you've lost the uptrend. So let's jump down on SPY on the daily chart, and what I've drawn in here is a uptrend line going way back to the end of 2020. That's just what I have on the chart. You could go back farther if you like. Comes right in at the same spot, and you can see that we just talked about. We had the prior high. We came back to visit the trend line. then we broke out and we moved up here to 470, and now we've rolled over quite quickly. So now we are at the intersection of the uptrend line and support at 450. I expect somewhat of a bounce. We'll see how far it can go. But the thing to notice is that we're below all the moving averages. Remember what we talked about, when you get below the 8 and the 20, you've got to be tactically defensive. And when you get below the 50, we say nothing good happens below the 50. Well, here we are. And the thing is, it's happened very, very quickly, right? We were looking for new highs just, a day or so ago. And these have curled over really quickly. So right now, the most important line on the chart, as far as I'm concerned, on SPY, is holding 450, because below that, notice where these large volume over price bars come in, down at 435, and then you've got the 200 coming in here at approximately 420. What is it? 426. So that's quite a bit of ways farther down to go. So we definitely want to hold this trend line. We definitely want to hold 450. And if you are of the mindset of buy every dip because it's worked like forever, that's fine. But you break 450, you've got to get out of that mindset right away, in my opinion, because then the path of least resistance is definitely down, at least for a while. I would expect us to come down and come in for a tag of this 200. And if you go back in the chart, it's been a long, long time since we visited the 200 moving average. So I like to stay away from terminology like, we're due for a pullback or the market deserves a pullback. That's all conversation. I like to stick to the levels. But once you lose this 450 level, you can see where the support comes in, down at 435. And then once you're at 435, you're right there at the 200. So I think you've got to have that firmly in your mindset as a location. This is the 2-hour chart. Yesterday, I've taken the gaps off. I'm going to show you them on the 30-minute chart in a second. But we gapped up. We went up to resistance, and then we failed, dramatically. And here was the 50 EMA, and you can see just how big a sell-off that was. And just as an opportunity to do some learning. If you're gonna, I think there were some important takeaways from yesterday. Let's look at it. So here's where we closed. Let's see. This is the Tuesday night close, right? Down here, where we were oversold. We were expecting a bounce, and then we got a big gap opening, correct? And then this was the morning trade where we had that broad-based rally, that I jinxed by sending out like it looked good. All 12 sectors were green. We came up here and we actually filled this gap almost to the penny, right? We had a trend line. Whether you had it drawn or not, doesn't make any difference. There was a trend line there. We hit resistance when we filled that gap, and then we started coming down. Now, at this point, you could have been saying to yourself, okay, there's a pullback. There wasn't a panic situation, or there wasn't anything that led you to believe that anything dire was about to happen until this point. And that point was entering the opening gap. And that's why I always say, when you have a gap up open, you mark those gaps. It could be a gap and go, or it could be a situation where that gap comes back to be filled at a later time. You don't know if that's this afternoon or 3 weeks from now, but once you have that gap form, when you come back and you enter that gap, you got to be looking to the downside, because once you enter that gap, the automatic target is the bottom of the gap. And then this was the point where nobody could have, predicted that. But the ball was rolling downhill really, really quickly. And we had this marked as the 50 EMA. And when you lost, to go from a boldly green setup to filling the opening gap and taking it red, that would have been another sell point, right? So you definitely had a sell point here entering the gap, and you definitely had a sell point here when you broke, when you went from green to red right here at 456, and then we just cratered the rest of the day. Let's move on to the Qs. Here's the weekly chart. I've got a support line drawn here that comes in around 380. You can see that there's a little support layer here, but the real support comes in at around 355. And if we were to break this support line here, like 375, you see the 40-week moving average coming in right here at this large volume over price bar. You break this support line here, the bottom of this little wedge, you're going to come right down here to 355 and tag the 40-week moving average. Jumping over to the daily chart, we're still above the 50, which is good. That's, as you'll recall, on the SPY chart, we're below. So right here, as we come into the 50, that's going to be an important kind of point on the chart. You want to stay above the 50, because like we just mentioned, once you get below the 50, then you got a lot of different things working against you. So I've kind of got a pivot right here on the 50 EMA. There's a little support like right under it at 382. That would be an important place to hold. Why? Because that was the prior high. We had this high, we came back, we broke out. Now we're coming back. You want to hold that prior high, or of course, all this looks like a fake breakout. And notice you've got a really high PPO bear cross. You've come down from overbought on RSI, and now you're losing the 50. So, the indicators are rolling over, and they would lead you to believe lower. But remember, they lag. So if price were to gather itself at the 50 and bounce, that will, start affecting the indicators. And if this can hold the line at 50 and this can start to flatten out, there's a chance. But the look and feel of the charts are that starting to roll over, because here where price is below the 8 and the 21 day, you've got to be tactically defensive. You can't be, going out there going crazy on the long side. You've got to kind of assume you're going to go down here and test the 50, and then that'll be a big, that'll be a really big level. Jumping over to the 2-hour charts, you see we're in bearish regime on RSI, bearish regime on PPO, with them, turned down sharply after this move. Again, we gapped up. We hit trendline resistance. We came right up here to this 401 area. And if you go back to the video yesterday, we talked about, 401 being really important to take out, because that was resistance. That was the top of the breakdown candle. We never did it. You can see right here that 401 had capped all these candles. We had that bad downdraft the day before, and we said to kind of get the all clear, you got to take out the breakdown candle high at 401. Didn't do it. Went right up there for a tag and came right back. And then your sell signal was re-entering the opening gap, just like we talked about on SPY. You had the opening gap marked. When price came back, that was your signal to certainly get out of your longs and go short for the opening gap fill. And then your next shorting opportunity would be when you lost the opening when you went from green to red, and that would have been right here when you lost the prior day's close. That would have taken it from green to red, and then you got that liquidation bar. And you can see here, this is where the 50 comes in, right here at 385. So that's going to be an important level on the chart. And here was that 401 area that I talked about. Here was the opening gap that, we gapped up. We went up to 401, got rejected. And then here was the opening gap that got filled. And then we went from green to red right here. And then the whole thing let go. You can see on the 30-minute chart, we've got 388 as an important little line. Why? Prior low, support. So if we can pop back up above 388, then we can kind of stem the bleeding right away. So look at the level above, though, up towards 390 and a half, 391, because that might be a place for, a kickback rally to fail and start rolling over again, or back up here towards 393 and a half. So right now, you've got to be tactically defensive and look for these rallies to fail into resistance, and then that will give you good trade location to put on a tactical short. Not going to spend a lot of time on IWM. I think the only line that matters now is 210. We're below everything. We're below the 200. We had a fake breakout, came back into the box. Whenever you come back in the box, your target is the bottom of the box. So here we were at 232, and now we're all the way back at, closing on 210 at the bottom of the box. If this fails here, that'll be a big tell on the market. Why? Because it will have basically marked a year-long consolidation top that's $23 wide. You lose 210, then you're automatically looking at 190 or lower, and then that would be your big top of the market on IWM. Here's the same thing, just set a different way on a different chart. You gapped up, failed. This was the first one to go back into the morning gap, and then that was your signal to get short. And then when it went from green to red, right here was another opportunity. I'm going to zip through the FATMAAN names. What I've done is zoom out to the daily chart because of the events and kind of give you the big picture. What I'm going to do this morning is go ahead and post these on the blog. It's going to take me a little extra time, and but I want to just post these charts for you for later reference if you don't have them, and then you can pick off the right levels if you don't have them on your chart. But Facebook, bad. I mean, bearish. What can I say? We had the down move. We had a kickback rally, and now we lost all the moving averages with today's or yesterday's move. You see the 200 here lost, and so we're down here in the 310, 312 range. You can see that we've got a line of support here at 300, but below that we've got a gap that never got filled that's down in the 285 area. I will clean up these charts and show you that, but I mean, as far as I'm concerned, 300 has to hold, or it's basically over. I mean, as far as Facebook's concerned, I mean, we're already below the 200, and you've got a line of support at 300, so not looking very good. Apple is probably the best of the bunch. I'm still here on the 60-minute chart on Apple. Why? Because we have not lost the breakout yet. We talked about the other day. We had this breakout at 164.5. We shot up yesterday and we came back, and now we're sitting at that level. If this 165, 164.5 level breaks, I would imagine that price would come down and probably test this gap here. And then remember 157 was the original big breakout. We had a lot of price action down below 157 for a long time. We broke out. Remember that classic move? Breakout, back test, go. That's bullish action. You normally see that. Very common. Breakout, back test, go. So now we have another breakout, but is this going to be a breakout, back test, go, or a breakout, failed breakout, and then come back? So, I mean, I doubt Apple's going to be the one, out of the whole bunch that stays bullish. The generals are the last to go, right? The infantry, the IWMs, the small caps, they're the ones that go first, and then the generals go last. And Apple has been one of the, Apple's the 5-star general, right? The best of the best. But now it's starting to roll over. Tesla, still on the 60-minute chart because we've got a well-defined line of support at 1080. Price moved into this open gap from yesterday. I would have 1080 highlighted on your chart if you're any kind of a Tesla trader, because if you lose 1080, here comes 1050, and here comes 1020, and here comes 980 really fast if this thing begins to roll over. So you really want to see 1080 hold on Tesla. And if there's a bounce this morning, which we are bouncing, it's green this morning, you've got that line at 1120 that we have visited a lot, and now that's going to be resistance. So if you're inclined to short Tesla, that 1120 is going to be your first first location to give that a try. And if that does not work, I think your level is either going to be 1150 or 1170 up here where yesterday's rally failed. You can see that here was the prior high. We had a try yesterday and it failed, and then it was straight down after that. Microsoft. I showed this chart the other day and showed you how critical 330 is on the Microsoft chart. You see it here, just a massive, massive void here below 330. I mean, if there was a, there's no easy trades. They all, they're easy when you're not in them, and then they get hard as soon as you put a position on. But as far as setups go, I always like to see, if I'm going to short something, I love seeing these voids below because there's not a lot of structural support. And I would imagine on a break below 330, you're going to come down here to 320 at the 50 really fast. I do not expect a lot of buying activity. Once you break 330, everybody else has charts too. They're going to wait for a clear line of support. And I would think the first location is going to be the 50. And then if that doesn't hold, it's going to come all the way back to 305. Why do I say that? Because that's where the breakout was. You can see it right here. Remember all that time we spent at 305 trying to break out, and then once it finally did, boom, $50 move really quick. That's that, Jesse Livermore breaking those century marks can kick a stock into gear. And once it kicked out of 305, it went up really fast. So that means there's not a lot of support on the way down. So if there was, if you were interested in shorting, some mega cap tech, and you see Microsoft lose 330, that would be high on my list. Amazon, right here at trend support, sitting right on the 50. You lose the 50 right here at 34.50. I would imagine come right down to the 200, $100 lower down here at 33.50. So sitting at an important place on the chart. If you got a kickback rally into 35.50 that starts to fail right in here, that's an even better trade location if you want to try a short with a stop just above. Google lost the 50. Had several tries here to get over like 29.10. Couldn't do it. Now price is below all the moving averages, all the fast ones, below the 820 and 50 day. You've got a little line of support here at 2,800, but if you lose 2,800, then you're going to be down here at 27.75 with this large volume over price bar. And then, God forbid, if we lose that, then you got the 200 way down here at 25.50. And you can just see that Google has been such a strong chart, how far away from the 200 it really got. I mean, it's 25.50 to 3,000. So that's, like $450 away from the 200, and that's quite extended. Netflix really let go yesterday. Came down, sliced right through the 50, never even hesitated. There was a breakout level at 540, cut right through that. Now we're down here at this level here at 620. Not a lot below it. I mean, to be honest with you, I expect a little bit of a rally today, but if you break back below 620, I would imagine you're coming in here to the 200 because here's your next big volume over price bar at 575. So, yeah, not looking too good. Semiconductors, I mean, bad day. You know, really not as bad as most. Honestly, it held this gap, so holding up better than most. But when everything starts rolling over, then you got to look at the stuff that hasn't rolled yet and see if it's going to follow. You got a trend line here. You've got a gap here. I do not think I would short this until we find out if this gap fills and this big line of support here at 299 holds. I think there's probably easier ones to short, but below 299, then I think everything starts rolling downhill fast. You've got a gap here down to 292, and then look at this massive void over here in the charts. I think you would go from 292 to 280 in a heartbeat if things really started falling apart. And as long as we're talking about things falling apart, we had talked about ARK, we talked about the Ponzi, we talked about these levels. I hope you got short some of that stuff earlier this week into last week. ARK FinTech, we talked about 48. We talked about the kickback rally to 48. That was a good entry point, and that just let go yesterday. And now it's below 45. That was the prior low, right? We said if that broke, we were going to visit the prior low. We've done that. We've undercut the low. If you get a kickback rally to 40 to 45 or a little higher, you can put on a short there. I think this is going lower, and I will do some work on this chart to back it up to show you that there's a major void in this chart that can send this way, way down. And while we're sticking on ARK, we've been talking about ARK Genomic. We've been talking about it since it broke 70. We had the measured move target down here at 45. We've got the last chance, last stop at the train station here at 55. I think it's going there first, and I actually think it's going down a lot lower. I think all this Ponzi stuff is over. All the high valuation, high flying, no earnings, crazy multiples, valuations based on sales, not profits. I think all that stuff is over, and we've been talking about that a while. So stay short genomics. Here's the ARK. Here's the flagship fund, and we talked about 113. We talked about 107.50, and here we are testing this prior low back at 100. We actually undercut it. If you get a kickback rally and then have it drop below 100 again, I'd get short. And remember, this is in the context of Tesla not even having fallen apart yet. Tesla still looks relatively okay. I mean, it has not liquidated. So when you see ARK Innovation that has a large weighting in Tesla, and Tesla's still, basically holding up compared to a lot of other ones, yet you see price liquidating. I mean, what's going to happen when Tesla rolls over? I mean, this thing can go way down, and I will do some work on the weekly charts and look and show you where those targets may be. But let's suffice it to say, as long as this thing is below 100 and that prior low, it's going lower. ARKW, we talked about it. We talked about this. as a learning thing. Price re-entering a prior trading range after breaking out, it's always bearish, and your target is the bottom of the box. And here we go again. We break out, fail, re-enter the trading zone at 155. Your target is automatically the bottom of the box, and we blew through that, and now we're heading to this prior low at 122.50. I think this is going to set up as a good short. Remember what we always say too. Don't get massively discouraged that, oh, yeah, well, he pointed it out there and I didn't take it. And then he pointed it out here and I didn't take it. And then I didn't have that alarmed at 137 and I didn't take it. Man, I suck. Get that out of your system and look for the next opportunity, because they're coming at us all the time. You just got to, pick your spots and be ready for the next opportunity. Even if you've missed 3 opportunities prior, that doesn't mean the next one can't be really, really good. So you get a kickback rally, and this is a very common move. It's the same thing as a breakout and a back test. If you get a breakdown and a back test back to 137, I can almost guarantee you that that's going to fail. Why? You got resistance all along the way here, and now you're going to have a little kickback rally to 137. I don't think it's going to have the power to, break out and go to new highs. I think it's going to fail right there, and I think you're going to come back to 122 at this prior low. And, if the whole thing falls apart, there's a lot of air under 122.50. So a lot of stuff happened yesterday. A lot of chart work to do. Keep your wits about you. Don't get flustered. Take a step back. Focus on levels. Focus on levels, and don't. I think now that we're below the 8 and 21 day, and in some cases already below the 50, you've got to reorient yourself into, one, protecting gains that you've got. Think twice about, I'm going to buy the dip because it always works. We may be at a point with Fed policy changes that's not going to work anymore. We may be in for a major check back to the 200, which is quite a ways below. And remember, a check back to the 200 that holds, we're still in an uptrend. So we could have a major pullback to the 200 and then start reaccelerating again. So don't assume that we're going into a massive bear market, but you can start looking at it and saying, below the 50, you can't take any chances. You got to really know your levels and not assume that every dip is going to be bought, because there's going to be a point of recognition by the crowd that, hey, this buying the dip isn't working anymore and I'm getting out. And then you get those liquidation bars like we saw yesterday, quickly. And you can see how fast price can evaporate. So make sure you're on the right side of that trade. So let's wrap it up there. If you're new to the channel, I hope these levels and thoughts help you in your trading. I'd certainly like for you to subscribe and hit the alarm bell. That way you'll get my YouTube content. And then jump over in the show notes. You'll see a link to the blog site where you can register for all my content. You'll get an email each and every time I send out market observations, trade ideas, etc. Be great to have you join the team. And you'll also have an opportunity to join our trading room. A lot of good, sharp traders, guys and girls in there working hard, helping each other out, celebrating victories together, and encouraging each other when things don't go our way. So a really nice community, and I'd love to have you join it with me and the rest of the traders. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.